Good morning. As the sun rises over the financial capitals of the world, a sense of unease hangs in the air. It's Friday, June 20th, 2025, and the markets are waking up to a day that feels anything but ordinary. Wall Street is tense, with traders and investors alike bracing for what could be a pivotal session. The optimism of weeks past has vanished, replaced by anxiety over mounting geopolitical tensions and persistent economic weakness. The mood has shifted dramatically, and uncertainty is now the dominant theme. Major indices are flashing red in pre-market trading, signaling a cautious end to a volatile week. Investors are on edge, watching every tick and headline for clues about what comes next. The VIX, often called the market's fear gauge, is ticking higher as investors shed riskier assets for the safety of cash and government bonds. Volatility is back in focus, and risk appetite is fading fast. Every headline and data point is under the microscope. Analysts are dissecting every report, searching for signs of stability or further trouble ahead. Geopolitical flare-ups, weak Canadian data, and ongoing trade disputes are converging, shaking market confidence. The global backdrop is adding layers of complexity to an already fragile environment. The easy gains of spring feel distant. Now, uncertainty rules. The mood has shifted from hope to caution, and the sense of risk is palpable. Traders are selling first, asking questions later. Defensive moves are dominating the morning, as fear of the unknown outweighs the hope for quick recovery. The market is bracing for shocks, unsure if this is a temporary blip or the start of a deeper downturn. No one wants to be caught off guard. As we head into the final trading day of the week, caution is the watchword. Many are choosing to sit on the sidelines waiting for clarity before making their next move. The path of least resistance appears downward, at least for now. The pressure is building, and the next few hours could set the tone for the weeks ahead. Today will test the market's resilience against mounting headwinds. All eyes are on the closing bell, as investors hope for signs of stability in a market on edge. The biggest shock this morning comes from rapidly escalating tensions between the US and Iran, a development that has sent ripples of uncertainty through global markets. Overnight, a series of alarming headlines rattled investors worldwide, triggering a sharp sell-off and sending US futures tumbling as traders scrambled to reassess risk. Geopolitical uncertainty is spooking investors, driving a classic flight to safety. Treasury bonds are in high demand, pushing prices up and yields down as market participants seek shelter from the storm. Yet in a surprising twist, oil prices are falling, not rising, even as conflict brews in the Middle East, a region typically synonymous with supply risk. Instead of fearing supply disruptions, traders are increasingly preoccupied with the specter of a global economic slowdown, which threatens to sap demand for energy worldwide. Demand fears are now overwhelming traditional supply concerns, as weak economic data and cautious forecasts dominate the conversation among analysts. The market is betting that even if oil flows are disrupted, persistently weak global consumption will have a greater impact on prices than any temporary supply shock. This dynamic signals deep pessimism about future growth, with investors bracing for a prolonged period of economic uncertainty and subdued demand. Meanwhile, the White House remains conspicuously silent, offering no reassurance or policy direction, which only fuels anxiety and speculation on Wall Street. S&P 500, Dow, and Nasdaq futures all point to a sharply lower open, reflecting the market's nervous mood and the widespread uncertainty gripping investors. Every official statement, press release, and offhand comment is being dissected for clues about what might come next, as traders search for any hint of stability. Until tensions ease or clarity emerges, this geopolitical overhang will keep volatility high, with wild market swings likely to persist in the days ahead. For now, Wall Street is stuck in a holding pattern, anxiously waiting for the next move, hoping for a sign that the storm may soon pass. Canada's weak April retail sales are adding to market worries. Consumers are pulling back, hit by high interest rates. The Loonie dropped to a multi-week low, reflecting economic strain. A weaker currency may help exports but makes imports pricier, squeezing households. Traders now expect the Bank of Canada to cut rates sooner. Canada's slowdown threatens U.S. exports and raises questions about North American consumer strength. Is this a preview for the U.S. or just a Canadian issue? The Bank of Canada faces pressure to act even if inflation isn't tamed. For U.S. investors, Canada's troubles are another headwind. The cautious tone dominates as external weakness weighs on sentiment. Trade tensions between the US and Canada are back in focus. Talk of new tariffs is unsettling businesses and investors, especially in resources and manufacturing. The threat alone delays investment and hiring, dragging on growth. Resource stocks, lumber, steel, aluminum are under pressure. Tariffs could disrupt supply chains, raise costs, and reignite inflation. US companies relying on Canadian materials face higher expenses. This uncertainty injects more volatility into an already nervous market. Until resolved, tariff talk will weigh on industrial and material stocks. Amid the gloom and uncertainty that's gripped the markets lately, a handful of companies are managing to shine through the darkness, defying the broader negative sentiment. Accenture, for example, is surging after reporting robust earnings and delivering an upbeat AI-driven forecast that's caught Wall Street's attention. Their focus on artificial intelligence and digital transformation is paying off, helping them outperform many peers. It's a clear sign that tech leaders with strong innovation pipelines can thrive, even when the overall market is facing headwinds and investors are feeling cautious. Meanwhile, GMS Incorporated is sliding on weak construction demand, highlighting the ongoing pressure on more traditional sectors. The slowdown in building activity is weighing heavily on industrial stocks, reminding investors that not all parts of the economy are moving in sync. In the world of crypto, Circle Internet Financial is reviving its IPO plans, giving the sector a small but much-needed boost of optimism after months of uncertainty and regulatory scrutiny. Even on so-called risk-off days, unique stories and company-specific news can move individual assets sharply, creating pockets of excitement amid the broader caution. But through it all eyes remain firmly fixed on the Federal Reserve, as investors look for any hint of a policy shift. The Fed is holding steady for now, waiting for clearer signs that inflation is cooling before making its next move on interest rates. Next week's inflation data could dramatically shift the outlook. If the numbers come in low, rate cuts could be back on the table. But if inflation stays hot, more pain may be ahead for markets and borrowers alike. The market is on edge, with traders and investors alike anxiously awaiting the next catalyst that could set the tone for the weeks ahead. This Friday is tense, but the real fireworks, the moments that could truly shake up the market, may come next week, as new data and decisions unfold.